So good afternoon, ladies and gentlemen. Good afternoon. Hello, can you hear me? Good afternoon and welcome to this session. This session will focus on the AFAC partnership, which is the Africa Financial Alliance on Climate Change. My name is Edith Ofwana-Adera. I work with the African Development Bank as the coordinator of the Africa Adaptation Acceleration Program, and I will be your moderator for this afternoon. I'd like to just give a bit of context before we go into the first speaker. We know that we are currently in COP28, where we are focusing on the first global stocktake after the Paris Agreement was signed. And with the global stocktake, there's a call for greater urgency to close the climate finance gap. The gap is large, especially for Africa. We know that at the conclusion of the Africa Climate Summit, which happened in Nairobi, 20 heads of state and government called for the private sector to play a bigger role in mobilizing financing for climate action. And therefore, there's need for partnership for us to be able to close the financing gap. And the private sector is very critical. The Africa Financial Alliance on Climate Change is a voluntary Pan-African coalition that brings together a number of partners from the financial sector. And the idea really is to de-risk and also direct capital flows towards low carbon and climate resilient development. So the private sector plays a critical role. The AFAC strategy was launched at the Africa Climate Summit. And today we are gathering to just take stock of progress to date, be able to see how we can partner together to ensure that we can bring on board the private sector to play a big role in closing this gap. So with that, I'd like to start with my first speaker. It's my pleasure to invite Dr. Kevin Kariuki, the Vice President for Power, Energy, Climate Change, and Green Growth of the African Development Bank. Welcome, Dr. Kariuki.
Thank you, Edith. Heads of AFAC member institutions, our distinguished panelists, ladies and gentlemen, I am delighted to welcome you to this AFAC side event at COP28, which builds on the one that we had at COP27 in Sharm el-Sheikh, and at the launch of the AFAC strategy in the margins of the Africa Climate Summit in September, three months ago. The theme of this side event focuses on the role of the African financial sector in mobilizing private sector finance. This topic is highly relevant as the private sector has been elevated among the key solutions to keeping the 1.5 degrees Celsius goal within reach. As we have heard at this COP, the conversation around climate and development are becoming more complex as the world faces a polycrisis, including geopolitical conflicts, debt pressures, and many African countries, rising inflation, and climate change. African countries face losses of between $7 to 15 billion annually due to climate change, which could rise to up to $50 billion annually by 2030. The cumulative climate finance needs for the continent are estimated at about $2.8 billion between now and 2020 and 2030, and this amounts to about $277 billion per year. According to our estimates, private climate finance flows will need to increase by up to 36% annually to close the estimated climate finance gap by 2030. Despite these challenges, I am profoundly encouraged by clear outcomes and climate finance in these early days of the COP. For example, the adoption of loss and damage fund to provide support to the low-income climate vulnerable countries, the announcement of the 40 billion Altera fund by UAE, the COP28 presidency pledge of $4.5 billion to unlock Africa's clean energy potential, and the African Development Bank has come to this COP with renewed ambition on how to raise climate finance for Africa's mature pipeline of climate-smart investments. Earlier this month, $34 billion in investment interest was secured at the Africa Investment Forum. 2 days ago, we also launched the $1 billion Africa Climate Risk Insurance Facility, which seeks to protect farmers and countries against catastrophic weather-related events and stimulate private sector investments in agriculture by mitigating the associated risks. Harnessing these investments towards concrete projects that leverage Africa's young workforce, entrepreneurial spirit, and abundant natural assets will realize the potential of Africa to be a global solution provider for climate change. The bank is spearheading the work through the Bridgetown initiative to channel $100 billion of IMF's special drawing rights to deliver climate benefits to the continent. In this regard, allow me to make three important points. First, the first message is that I am really encouraged by the level of ambition expressed by AFAC membership. The Nairobi Declaration on Sustainable Insurance and its members pledged $14 billion at COP27 to provide disaster risk insurance coverage to vulnerable African communities. The Marrakesh Pledge by the African Capital Markets Institutions has committed to fostering an enabling environment for green financing instruments on the continent. And the Pan-African Fund Managers Association, recently launched, has proposed to foster the adoption of alternative investments, including green projects. We are ready to work with them to achieve this goal. The second message that I would want to convey is that Africa needs to create robust policy and regulatory framework to grow private capital flows at the rate of 36% per year, estimated in order to be able to close the financing gap by 2030. The African Development Bank and its partners within the Africa Financial Alliance on Climate Change in September 2023 launched the vision and strategy for 2023 to 2027 to create the necessary conditions for greening the financial sector in Africa. I am also pleased to note that Africa financial institutions are enthusiastically setting on board with AFAC platform, including the following institutions, just to mention but a few: the Nairobi Declaration on Sustainable Insurance, NDSI, the Marrakesh Pledge for Fostering Green Capital Markets in Africa, and the Association of African Development Finance Institutions, as well as the Africa Rural Agricultural Credit Association and the Bank of Africa Group. I am also pleased to note the enthusiasm with which development institutions involved in greening Africa's financial sector have come together to support AFAC, the AFAC strategy. And in this regard, I must also note that the bank has been joined by the following institutions. And I want to mention them because we appreciate the fact that, as Tony said earlier, we can't do everything on our own, and we'll be stronger with partnerships. We have the Global Center on Adaptation, the Financial Sector Deepening Africa, FSDA, the United Nations Environment Programme Financial Initiative, UNFP-FI, and we are currently in discussions with the International Sustainability Standards, ISSB, on the design of Africa specific reporting and disclosure standards. Throughout this year, AFAC has conducted widespread awareness on climate change and the Africa financial sector, reaching over 900 financial sector professionals. The AFAC Secretariat has also started developing Africa's first continent-wide environmental, social, and governance taxonomy for the financial sector as a key building block for the fostering of transparency in Africa's growing sustainable financial market. The third and final message that I want to convey is that the bank is providing technical assistance for countries that wish to establish green banks. Just in a nutshell, the Green Banks Initiative aims to create an ecosystem of quasi-public or private entities that will mobilize blended finance towards bankable green projects. In conclusion, let me reiterate that while mobilizing domestic financing is crucial, we believe more than ever that more can be done to attract international private climate finance flows to the continent. Thus, the bank and its partners under AFAC have committed to amplifying the voice of the African financial industry in global climate finance dialogue as a step towards unlocking international private climate finance flows to the continent. Africa is home to the world's youngest and fastest growing workforce, coupled with a massive untapped renewable energy potential, abundant natural resources, and the entrepreneurial spirit. Therefore, I am enthusiastic that over the next hour and a half, we can identify concrete opportunities to deepen the financial sector's role in de-risking the flow of climate finance to the continent. I do believe it is achievable, and I wish you all very fruitful deliberations. I thank you very much.
Thank you very much, Dr. Kariuki, of just underscoring the importance of the financial sector in closing the financial gap and increasing their commitment by 36%. And also just taking us through what the bank is doing concretely to engage with the financial sector. Thank you very much. I'd like to now turn to Ms. Davina Uwela, who is going to do a presentation on AFAC. Over to you, Davina, and you have 20 minutes. Thank you.
Well, thank you very much. I know it's a very busy day. Today is a finance day here at the COP. Welcome. And so ideally, I'm standing here to just put the face on the AFAC Secretariat. Most times, people don't understand. It's like, what is this alliance? Just to say, it has a secretariat at the bank. I'm part of the team that supports the alliance. So very quickly, as you know, this alliance will launch the strategy in Nairobi at the Climate Summit. We'll speak through that. But I just wanted to go through what we've done since then and even before then. So a bit of context. We are in a very challenged environment. Africa is really impacted by climate finance. As you can see, 9 out of 10 African countries are the most vulnerable, not because we have the highest incidences of climate impacts, it's the level of ability to adapt. And when a storm hits anywhere in any of the developed countries, the businesses and the communities are up and about in a week. When it hits Mozambique 3 times a year, people lose their livelihoods for many years. And so it's very critical that the African continent really takes the climate challenge seriously, and at the center of it is our financial sector. So again, as you can see, we have trillions of dollars that need to be leveraged. We have capital flows that need to come to the continent to grow by 36%. That is a huge sum. But I think I want to end with one statistics, which is on the GDP that is shrinking. And that is something that we should really take seriously as we get into the conversation around the impacts of climate change, because we cannot be a continent that is going to grow with these kind of dire statistics. What is it that we think AFAC can do? This is an alliance, it's an eco-partners platform on how to create that terrain. Because when a lot of African institutions, and we'll hear from the people in that area, they've been speaking, but it's difficult when you speak alone. And so what this platform is about harnessing the power of the collective. If the insurance sector stands with the banking sector, with the regulator, that there's no divide, then they become a force that speaks for what the continent can harness. And there's a whole lot of, we are doing this for Africa, we are doing that for Africa, but there has to be the force in Africa that is receiving. And this is what AFAC is about. So we've designed the strategy, 5-year strategy around these pillars. There's still pockets of unawareness. There's issues with data. There's issues with climate risk management. There's issues around regulatory. And of course, ultimately, we need to mobilize green finance at scale. So over there, what has happened? There is that the banks consider 82%. So there's some level of awareness. There is data that shows 82% of our banks consider climate risk as a high priority. In insurance, 128 are members of the Nairobi Declaration on Sustainable Insurance. And at the last COP, they committed to raise premiums of $14 billion US. That is a commendable feat. Number 3, we have the capital markets also coming in with a pledge. So these are already efforts that need to be raised. And then we have institutional investors. So all these are already pockets of work that the continent can then leverage onto the global stage. How is the structure organized? So the Secretariat is hosted within the African Development Bank, but with it, we also have other institutions that are members of the steering committee. So the members are institutions, whether they are banking or insurance, that wish to have a conversation around these issues. They sign up because they already have a pledge to do something in the climate space. And we have a peer platform. So there's not that the bank has a bigger say. It hosts that conversation, but we have weekly exchanges to create that trust. So that is how the structure is set. And so far, who have we talked to? Who has heard the message? Who's coming on board? This is who is coming in. But this is just the beginning of the journey. And we want to see as many, and even then, these are already established financial markets. We want to even go deeper to the informal sector, to the micro level, where the most people are. And so by creating this platform, we think that we can then craft the message that can go deeper to the unbankable communities. And these are the partners, the strategic partners that we are working with. Again, these are the ones that have come on board. We would want to see more. What have we done over this year? We've conducted many awareness conversations and meetings with various stakeholders. We've had work around access to data, because that is very critical. And then we've also had work around, my vice president talked about the ESG taxonomy that we are developing with our partners. And then, of course, we're working around climate risk management. And then we're doing work around the green finance. As the VP said, we're also working around the green banks for countries that wish to establish them, because we believe that with national institutions that are dedicated to mobilizing green pipeline, then institutions such as the World Bank, like our bank, we are able to then pick from what the countries have prioritized. So it's really across board. It's at the top, at the bottom, in the middle. Yeah. This is what happened in Nairobi for those that were there. We launched that strategy. We had the different speakers. And again, this is a journey that we really want to get everybody involved on. This is what we are starting on, called the Green Banks Initiative. Again, it is a demand-driven, countries, institutions that wish to get onto that journey. We're starting that conversation. Then we also have what we call the Africa Green SME Facility, like I mentioned, at the bottom of the financial sector in the African context is a lot of informal lendings. So that constituency also needs to be represented in these conversations. So we have these programs that are also part of the financial sector, not the big brand corporate structures, but also the ones that have, you know, the vegetable sellers and all these cross-border financing arrangements. So, in concluding, what are we doing? We know there's a lot of significant climate finance needs. How is it going to happen? It's going to happen through partnerships. When we all bring our voices together, there's a whole lot of uniqueness, there's a whole lot of even de-risking because we know each other. I keep telling people, before COP21, MDBs as ourselves, we were already working on tracking our finance at a very technical level. When COP21 happened, our management took that work and realized, oh God, we have all this work that has now defined how MDBs work. So this whole technical level conversation creates the necessary voice, it creates the trust. Because it's very difficult to go through very structured arrangement. It takes time. And we're talking about we need speed and scale. We're going to do that by having very technical level conversation with our technical teams. And so that's where the AFAC platform comes, because it creates a very trusted platform where everybody has something to contribute. So I'll stop here, Edith, to say thank you very much. We want to see you bring your stories. It's not a very technical or very tailored conversation. It is an African conversation. Thanks.
Thank you very much, Davina. And I must say that it's very impressive to see the journey that has gone through in putting AFAC together and the level of ownership. I would now like to invite Ms. Neza Hayat, who's the chairperson and CEO of the Moroccan Capital Market Authority, for your reflections. You're welcome.
Thank you. Good afternoon, ladies and gentlemen. Well, first let me congratulate you for the AFAC initiative. That is another achievement for our continent. And let me just deliver some remarks on what we've been doing in Morocco and how we have and we are still cooperating on a continental basis. So, as it was told, I had the Moroccan Capital Market Authority. I also, within the IOSCO, the Association of Securities Commission, I also share the Africa and Middle East Committee. We are here in COP28, but our journey, at least for me, and starting in COP22 in Marrakesh, which was called as one COP for the African continent, and also one COP where financing was going to be discussed. So at that time, so in 2016, Morocco decided to commit locally, but also continentally to facilitate the financing, climate financing. So we've had a national roadmap gathering government, represented at Ministry of Finance, central banks, capital markets authority, insurance regulators, banks, insurance companies to commit to a roadmap for climate finance. And since then, and this national roadmap with actions is being being looked at and followed every year in our Stability Finance Committee nationally. But we also committed to promote climate finance within the continents. So you can see you have banks, African banks, insurance, but also capital markets that have been going in, been developing initiatives and cooperation. And this is where we decided it was our initiative, but together with the stock exchanges and regulators to commit, and it was a strong commitment from the African regulators, the stock exchanges, in this Marrakesh Pledge, which today is not only functioning, but since the presentation, since the launch, we have had 6 more signatories. So today we have 25 signatories representing 35 markets in Africa committing in this Marrakesh platform. So what are we as financial regulators, what are we doing really, to facilitate? And how do we link it with this continental initiative that we're following and promoting? In Morocco, we've had a very pragmatical approach, saying, well, financing, if we want to attract investors to finance sustainable projects through capital markets, we have to set up the framework for tools for finance, and it was the green bonds. We started with green bonds, publishing guidelines where we would decide to take the best international standards. Our first guidelines were worked with the cooperation of IFC, and we helped then, we also helped some of our peers to do the same in the countries within the continent. So to set up a clear framework of green bonds, sustainable bonds, social bonds, and I see many women with FSD Africa that is involved also not only at AFAC and GFNZ. We launched the gender bonds guidance, and we already had 2 gender bond issues. So the idea is to set up a clear framework for products and what is required from the issuers to be able to issue a green, a social, a sustainable, and it also has to do with it helps also develop our capital markets. Our capital markets are should be more important than they are. They do not contribute enough. They have different ways of the economy from a country to another within a continent, but there's a big potential. So at least these products will also help developing the markets. This is on one hand. On the other hand, we have focused on what is important is transparency and information. So if we want money to come to these sustainable projects, we have to make sure that there is a reporting and there is a clear and measurable reporting on these issues. So, for instance, in Morocco, we made the ESG reporting after a period of voluntary ESG reporting. We made it mandatory, and now we're trying to go to the next step, which is a report, an ESG report that would be maybe taking some standards like the international ISSP standards that have been recently published. And we're committing within our environment of regulators at IOSCO to follow. But in this work on what kind of transparency we cooperate within the continent, either through the Marrakesh Pledge, but also within our African and Middle East committee, but also on a bilateral basis to share our experience and our challenges of regulatory, of legislation, and that we try to help each other and to benefit from each other's expertise, because information is important, and we have to admit that when an international investor looks into Africa, it looks at the continent. Any of the project in a country will never be that big enough. Our markets, even the largest one, is not large enough. So it is important to have harmonized standards also for not only in capital markets, but also for the information. And the third pillar that we put in place, and we can find not only through our Marrakesh Pledge, but also nationally, is to raise awareness and to build capacity building. And this is what we have been doing in the Marrakesh Pledge, involving stock exchanges and regulators to set up conferences and to explain and to prepare our stakeholders and our environment and ecosystem of capital markets to be able to attract investor and channel investment for sustainable project in Africa. So this was briefly a comment, and to explain to you the relationship since in the presentation AFAC has, and I thank you for it, mentioned the other platform existing ambition, and clearly we will definitely have opportunities to cooperate. I also sit, you mentioned GFANZ. I sit on the African board at GFANZ. I understand there's a partnership, and we're very happy to be able to all cooperate together. It's really also an opportunity for the continent, not only for sustainable projects, but for all the projects. And to attract investment, we need to build strong capital markets. Thank you.
Thank you very much, Ms. Zena Hayat. I learned a lot from your presentation, and I think I pick a couple of things from what you've shared. One is the importance of building the capital market in a way that you diversify the products and that you attract investment. And I think also importantly, you've mentioned about the need to harmonize standardizations and also to share experiences so that way we can work together for the continent. Thank you very much for your intervention. Much appreciated. I would now like to transition to the next session, which is a panel. And I'd like to kindly ask Dorothy Masike. Dorothy, you will take over this session and moderate the session with the speakers that you have. Over to you.
Thank you very much. Thank you very much, and so glad to be in your presence today. This session is very simple. It's to invite a number of panelists. I'd like to invite Mr. Philip Lopokoit, the Group CEO of ICA Lion Insurance Group and the Chair of the Nairobi Declaration on Sustainable Insurance. Please put our hands together. I don't know if Dr. Dalia is here. Dr. Dahlia, thank you. Dr. Dahlia, Chief Sustainability Officer of Commercial International Bank of Egypt. Okay. Can you hear me? Can you hear me? Good. Good. So, yes, we have to shout. There's a bit of noise on the other side. So the first question goes out to Philip. Philip, how are African financial institutions integrating climate and nature-related conversations into their decision-making, into their processes, from your experience?
Can you hear me? I need someone, yeah.
Yeah.
Okay. Thank you very much. Thank you very much. Just want to help me. Is that okay? Yes.
Yeah.
Yeah. So I think maybe just before I kick off, I'll just give a very quick context, because as the chair of NDSI, what we currently are about, and then I can just dovetail that with your question. NDSI is a coalition of African insurers who were committed to the achievement of Sustainable Development Goals. We were launched in April 2021, and we've grown from strength to strength with the support of FSD as the secretariat. We started with 11 institutions. Today we have 135 representing 28 countries. And the members of NDSI are forward-looking. They invest in time, and they're keen to ensure that the ESG risks and requirements of their insureds are well taken care of. And so that association of 135 is really important with respect to the question, because we seek to share through peer-to-peer review some of the ESG discussions of the day. In terms of how we build that into our processes, and that's just remembering that one of the key reasons why we are targeting sustainable outcomes from our processes is because we look through our underwritings, we look through our operations, and we're mainly focused on ensuring that sustainable outcomes are delivered from that. So a couple, 2 or 3 areas that we currently look at. Firstly, in terms of risk management and risk modeling. It is not possible for underwriters to write risks without clearly understanding the risks involved, and that involves data and analysis, and making sure that we can actually price and understand those risks. an example that I can give from where I work at ICLI, when we had substantial floods over a couple of years ago, in order to understand where those risks lie, we had to use a satellite-based methodology to plan out those risks so that we can be able to say this has less risk and price it accordingly. One other element that we need to take cognizance of is the impact of adverse climate, in particular in the continent, and in particular on agriculture. And previously we were using what we call peril-based assessments, and now we use satellite-based assessments, and that again helps us take on risks which were previously uninsurable, and now we are able to price them accordingly. And just also further dovetailing that with recent discussions that were announced at COP28, AfDB announced about ACRIFA, and that's important because NDSI has participated in the ideation of ACRIFA by way of the concept note, and this is one of those areas that we're looking to support to the operationalization of ACRIFA, and that's a way that we can integrate that within our processes, because agriculture is really an important backbone for the industries in Africa. Thank you.
Thank you very much, Philip. I think just the dream and the idea of ACRIFA is groundbreaking. And I think I want to now draw it back to Dalia. How do we move finance? How do we actually move the flow of capital towards resilience?
Okay, thank you so much, and congratulations to AFAC. I had the privilege to attend the first presentation at Nairobi, and I'm happy to be here sharing with you this important topic, which is mobilizing finance to Africa.
Yes.
I represent Commercial International Bank, Egypt. It's Egypt's largest private sector bank. We're very much committed to Africa. We have presence in Kenya, but more so, we're very much committed to share our experience with sustainable finance.
Yes.
And with our African peers, okay? Because we know, I mean, not only banks, even insurance. And to set the scene to what I want to share with you all, I think we're here at COP28, which is focused on communicating the global stocktake to assess our experience globally with climate and to identify the gaps. But let me kind of fast forward the communique because the facts are already there.
Yes.
Right? The fact is that ever since Paris Agreement and the global consensus, climate crisis is getting worse. Global emissions are on the rise, and Africa is there to suffer. The $100 billion that have been pledged back in 2009 are not forthcoming. Third, Africa gets 3% of global finance. So these are enough facts for us to start a new African narrative. I mean, how many years would it take us to start to say, no, we cannot? It's true. I mean, I think we should stop talking Africa, stop repeating Africa is the most vulnerable, least responsible. Because no one really, it's Africa. It's Africa story. And what I want to share with you is that we need to reframe the role of financial institutions in Africa. And we need to shift the African narrative from that of a victim of a crisis not of its making to that of a global actor in the sphere of climate to become a maker of the solution.
Yes.
Right? So this is the starting point. Also, we need to shift the narrative from the top-down approach whereby climate talks are led by politicians and nations, and climate is excessively politicized, to the bottom-up approach whereby financial institutions in Africa lead the change, right? And we have some encouraging signs. Actually, Africa has around 700 commercial banks, not to mention the insurance sector and the capital markets. And there is a decent level of resilience within these financial institutions. We have a good starting point. And more importantly, we are starting with a clean slate. Remember, we did not cause the financial crisis, and we did not cause the climate crisis, right? So there is something good and fresh about lagging behind our peers in developed countries. Having weak systems or no systems is better than having systems that are not functioning. So with this in mind, in COP27, which was hosted in Egypt, Sharm el-Sheikh, we had 6 progressive panels, Commercial International Bank, and the title was From Africa and for Africa and from Africa to the world. And the assumption was that we need to export new thinking, fresh thinking, new ways of doing business, because I personally believe, and I've been into this realm since 2005, and I could tell that the financial system that developed is very much in crisis. So it's not a financial crisis that's not over, that keeps on reloading itself. It's financing crisis. But the problem is that we're very much waiting for regulations, waiting for funding, everything. We're waiting for the change to come from outside us. So with this, the premise is to enact a bottom-up approach and empower financial institutions. We have a positive experience whereby we went through internal system transformation, engaged our clients to transform, and started to see signs of real economy transition. So we have the recipe. And around Africa, in South Africa, there are, global major banks in Kenya and Morocco. Around the globe, we witnessed issuance of green bonds. We witnessed data, digital finance.
Yes.
2 weeks ago, I was in Togo attending African Financial Industry Summit, and I was quite impressed with the level of awareness. And so what's wrong? We just need to connect the dots, and I hope AFAC will do the job.
Yeah, I think, you've made a point. She has said it's not a financial crisis, it's a financing crisis. And Philip, if I draw to you, then what tools and capabilities would actually help move the dial?
Okay, I think just also to just support my panelist here. I think it's well understood that if we spent $1 in preventing this early addressing of the sustainability issues, would actually be a lot better off. The actual cost of humanitarian and other costs of coming in later are much more. In fact, it's seen as about twice as much. So that payback is certainly there with respect to financing. When it comes to tools and methods in which we can address this, I think there are a number. And firstly, it's really about data and making sure that not only whether we get that data from the environment or we use satellite-based data, making sure that we have the right data and to have a good look at it to make sure that it enables us to better understand the risk profiles makes a significant difference. I think the other element that comes through, and at NDSI, is one of the reasons why we have that coalition, is about collaboration.
Yes.
And as we all appreciate, with respect to SDG 17, it's really about partnerships and collaborations.
Yes.
And working with partners, whether it's from the data side, or whether it's within primary insurers or reinsurers, those who have the knowledge, we can work together in order to be able to find solutions. And for some of these solutions, we also need capacity building as well, which is another key element to do with that. So, and if I just give an example that I have been involved in, and which is setting up a geothermal insurance facility. In order to do that, and that is an important element because geothermal is a renewable energy, and one of the focus points of COP28 is to triple the renewable energy, and therefore looking to de-risk early stage exploration is one of those elements that can substantially move the dial with respect to that conversation. So working with partners and getting the capacity and the technical knowledge in order to be able to underwrite that element is an important part of the conversation to ensure that we are able to have the right tools, have the right capacity in order to address these sustainable challenges in our continent. Thank you.
And drawing, and you've mentioned data as being key, and just wanted to understand what are some of the key challenges that you're facing as an industry.
I think data, and in particular within the continent, remains a challenge, in particular for some of the newer risks that we're currently looking at. Sometimes we do have industry data that's publicly available, but those are more to do with the what I'll say the legacy risks that the underwriters are well taken care of. So when we talk about some of the climate risks, and I've mentioned flooding, for example, or even livestock insurance, which is something that we are currently underwriting. In terms of understanding the behavior of the insureds, where people are actually going to move from point to point, so that you can see where to come in at their point of need, identify which are the nearest points for pasture, and so on and so forth in terms of the actual behavior of the insureds. All those elements are important for us to be able to price and help the insured accordingly. And therefore, those data are sitting in different places. In particular, when we talk about environmental data, some of that will be sitting in government. Some of it will be sitting in the private sector. Some of those will be sitting at the sub-sovereign places. So, collating all of that and then fashioning it in a manner that is relevant for decision making are some of the initiatives that we need to look at, and then also to look at to digest that same information with the expertise that we currently have in terms of actuarially evaluate that element in order to be able to price those risks. So different sets of data, accessing the same data, analyzing that data, and for some of them, there are huge amounts of data. And that's why the conversations to do with taxonomy and being able to move from the ideation that we currently are to execution is important. Data is really right in the middle of that. So we've had challenges and partnerships and collaborations help to do that, but also capacity building in terms of analyzing and breaking down the data for relevant decision-making purposes.
Thank you, Philip. Thank you. Dalia, over to you. The role of the public sector. So you are a regulated entity. Where does the public sector and regulators come in? I know we just had the CEO of Moroccan Capital Markets, but what specifically do you think they need to do?
I think regulators do have a role, a very important role, in establishing the infrastructure
Yeah.
for us as banks. So again, we need the African Sustainable Finance Taxonomy to have standardized guidelines. So we counter this fragmentation around the continent. We need regulators that mandate banks to implement sustainable finance. And there are a couple of movements. Central Bank of Egypt last year mandated all banks to implement sustainable finance, for example. So getting sustainable finance as a mandatory guideline, establishing a sustainable finance taxonomy for the whole of Africa. And there are other infrastructural gaps, like for transition finance, for example, we need the data for sectoral emissions to have climate scenarios that is African. We don't have this. When we want to set targets, we have to use the SBTI, which does not factor our
African
emissions.
context, yeah.
So it's this kind of infrastructure. However, I am a believer in the bottom-up approach. And even if the regulators are not there yet, this is not an excuse for financial institutions not to take the initial steps. Because, for example, CIB embraced the Net Zero Banking Alliance as a founding signatory, and it was not mandated. On the contrary, they said Egypt did not sign the 2050. How come CIB would? And we saw that's the business case. And we were ahead. When the regulator mandated sustainable finance, we were prepared. And now we are sharing the story with our peers to help them. So again, regulators, they have a role. It's very important, very powerful, but not an excuse for banks to become defensive, to work on the compliance level. You need to attend your growth. You need to see the business case of sustainable finance.
Thank you. And any last words, maybe from Philip, as Dalia, you prepare yourself. Any last words on what it would take to make the promise, keep the promise, and put money on the table?
I think what I'll say is that it's not for some of these things, it's not just one person that can do it or one institution. And collaboration and partnership is going to be absolutely important. And even as we look at AFAC and looking at as to how they can increase that collaboration, I think what someone said that together we are better. Is really the key element that I'll take out from COP28, and that in seeking to work together, we share the necessary information in order for us to be able to develop from the ideas that we currently have and take them to the execution state. And it's important that what we're hearing are really African voices looking for African solutions to African challenges. And all the people who need to be addressed are here, and the capacity to do that is here, and therefore we look towards delivering this agenda into the near future. Thank you.
Good. The capacity to do that is here. Dalia, Dr. Dalia.
I'll take it from what Philip beautifully said. I think Africa has it all to nail its climate crisis and turn it into an opportunity. Africa has the energy, the resources. Africa has a very viable, progressive young population, and that's a blessing. That's not available for other continents. And I discovered that Africa has the financial resources. The African sovereign funds possess around $2 trillion. Enough. So we have it all. But what we need to work on, maybe the only thing that we do not have, is this sense of confidence and self-empowerment and the determination to revise our own business models. I was talking about financial institutions. This is my pitch. I mean, with all my respect to all other stakeholders, I see the power of finance. I mean, witnessed it. I'm a graduate, political science and economics graduate, and my degree was in national security. And I was planning to work in Ministry of Foreign Affairs, the United Nations. But by coincidence, I joined a bank that was in the 80s. And then I could identify the power of financial institution to set the change, and the power of one industry actor, a bottom-up approach to drive the change. And this is why I'm there. So the power of financial institutions in Africa needs to be reframed, revived. We have very intelligent bankers, well-capitalized, relatively resilient. I mean, all the green bond issuance around the continent has been there despite the pandemic, including ours. So we have proof of concept of success. We really need to connect the dots, align, and have the confidence that we turn this climate crisis into climate opportunity. We can become the global hub for renewables. This is a fact. We keep on hearing this over and over again. We have the capital and we have it all.
We have it all. Ladies and gentlemen, hands together for the panel. Thank you very much.
Thank you very much for a very interesting panel. I'd like to check with Davina. I feel that the audience, because we have time, maybe had one or two questions. And I'd like to just check if we have time for that. Okay. So I'd like to ask if there's one burning question for the panelists. Even if they've gone back, they will be able to answer. Any burning questions for the panelists? Okay. I think I have one. I found it very interesting, especially the mindset shift about looking at difficulties as being opportunities, but also listening to Philip, who's talking about the data challenges, what needs to be there for you to make decisions. I was a bit curious about two questions. In the climate space, there's a lot of uncertainty when you're looking at the projections into the future. And if you're doing climate modeling, they will tell you they're not very sure. How do you make decisions with uncertainty? Especially with insurance, you have to pay later for activities that are not very sure in terms of the climate scenario. And my second question to both you and as well as Dalia is, what kind of skill sets do you need in your institutions when you have to deal with sustainability and climate issues? Are you finding that you have to bring in new skill sets and experience and expertise into your businesses? Thank you.
So thank you for that. And I want to start by saying that data is still an area we have challenges, but the concepts we're discussing are not very different in that sort of sense. We have a lot of uncertainty, even when we talk about earthquakes or other different types of risks. So we deal with an element of unknown. But I think here, when it comes to data and climate risks, the reason why it becomes important is because the risks are understood. The question is the pricing with respect to that. I think you may have heard that even I think on the west side of the U.S., some insurance companies have said that they're not covering certain types of risks. So what we are talking about, and what we're talking about in terms of the continent here, is trying to find the right balance, where we say that we have over 1 billion people who are impacted. But how can we find a process whereby we provide cover to a large number of people, whether it's through sovereign or sub-sovereign entities, in order to address the sustainability challenges of the day. And because of the size of the risk and the size of the premiums, you really need a coordinated process with respect to that. And that's where NDSI comes in terms of looking at the continent as one unit, because we have to talk about, then it becomes much more than data. We then start talking about regulatory supervision on some of these risks, but with size, it is possible. I think what we're now saying is that when it's in a much smaller scale, then the costs of the premiums are going to be much higher for particular geographies. So we kind of say we understand the terrain in that context, but with insurance, we want to work with as big a scale as possible in order to make it meaningful and in order to balance the risks. So data is important, but also data in a bigger scale is even more important. Thank you.
Thank you very much. Dalia? Oh, she has left. Okay. Thank you very much. So I'd like to close by calling on our director, Professor Anthony Nyong, who will give the closing remarks. Over to you.
Some people are protesting while you're closing. Eric, you wanted to say something?
Yes, sir. Thank you, Prof. So, no, I just wanted to support what the lady said about the need for a mindset shift and the need to look at climate change more from a solution and an opportunity point of view than a problem point of view. Because once you look at only the problem, you externalize the problem, that's how you externalize the solutions and the opportunities also. And that's why today, Prof, we talk so much about mitigation and adaptation. Instead of talking and then we look at them separately, we say mitigation is for the West, adaptation is for the South, which is rather, excuse my French, a bit of stupid, when there is no funds in mitigation. Instead, for me, I look at mitigation as reinforcing, as mutually reinforcing concepts. Mitigation reinforces adaptation, and adaptation reinforces mitigation. So I think there is a serious need for us to change the narrative, change the way we look at climate change. If not, those of us from the South, we will keep on chasing. Those of us from the North will keep on running with the financing. Thank you.
Okay, thank you very much. That was a good intervention. And success is not in numbers. We were few, but it was a very lively, very interesting, very energetic conversation that we had there. And a few key things came out. You know, Africa has acquired and apportioned to itself that intellectual property right of being the poorest, the most affected, the most vulnerable, the most impacted. All the negatives you can imagine, we have acquired it and we've owned up to it. And we take that same narrative to the private sector, and we all know that private sector money does not follow vulnerability, does not follow risk, does not follow most impacted. Private sector goes to where the opportunities are. And we have opportunities on the continent. Who can best deliver these opportunities other than our financial institutions? By what they finance. And that's why AFAC has been established, and that's why we're here today, to say, look, what can be done? Dalia said something. We have so much money on the continent, including through our sovereign wealth funds, name them. But what do? We keep our sovereign wealth funds in the banks of other countries, and then go back to those countries to borrow money. And I don't know what sort of economics is that. Our private sector has a role to play. Climate change is not just about externalities, it's about our development. And I would dislike to put my development in the hands of an external person. Our financial institutions should take charge, and that's what we're doing. So we've heard what were the challenges they were having. Data. We're working through AFAC to provide that data. What is it else they're looking for? Taxonomy, so that they can compare. We're working in AFAC to provide those taxonomies. Capacity, we're working in AFAC to build those capacities. I recall the first time I went to speak to the governors of central banks, the African Central Bank governors. It took me so long to persuade them to give me 3 minutes to speak to them. I still recall the moderator telling me, please, we have serious things to discuss, so you just have 3 minutes, and because they hadn't caught on yet. I entered there, 3 minutes, they said, no, please allow him to continue. Because they now got to hear for the first time that this is a serious issue. And after that, the chair said, you know what, this is not enough. We need to fix a meeting that you will come specifically to talk to us. I think we need to understand this. And that's how far we have come. So AFAC is out on a purpose, and if I quote what Dalia said, AFAC provides the Africa to Africa's problems. And that's exactly why we're here. So I want to thank the participants for again energizing us that we are on the right path. We will get there. The solutions will be here. We have a lot of resources on the continent. How do we tap into those resources? How do we channel those resources so that at least they align with the goals of the Paris Agreement? That's, I think, what we need to do. I talked with somebody who runs a reinsurance firm and said, look, Anthony, I'm convinced I need to be here. Why? Because there was a posh estate that was built somewhere, and that estate, each of the houses was insured. And then the insurance now came to him for reinsurance. What they didn't know, he didn't price his premiums right. He didn't anticipate certain things. Then there was the El Nino. After the El Nino, there was a drought. After the drought came the fires, burnt the estate. And the insurance companies came to him and dropped their claims. It sank the company. He said, I wish I knew. So don't talk to me, I'm already converted. I want to join you. We don't have to wait until the crisis and the risk get at us before we join. So thank you so very much for coming, and do have a lovely evening.